In the last 24 hours, Bitcoin has seen a short-term correction, retesting the prior all-time high of 2021. In today's video, we're going to be discussing where Bitcoin is likely to go next, how the short-term trend is developing, the possibility of corrections, and of course, what the macro charts are looking like. Let's go ahead and jump in. Okay, MegaWhale team, welcome back to the channel, guys. Thank you for tuning in. I hope you're all having a fantastic day today. In today's video, we're going to be discussing Bitcoin from a macro and a short-term perspective, discussing the current short-term price action, the recent rejection to retest the prior 2021 all-time high, the possibility of a correction developing, and why Bitcoin is likely to see a continuation higher. We'll also be going over the total cryptocurrency market cap and altcoin market cap, going over the weekly candle close and breakthrough of the prior all-time high and potential upper targets, and finishing up on the macro price action. So before we do get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos of Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you're interested in, join us on Telegram. It is the third link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency with Bitcoin and the relevant economic news. If you are interested in taking your trading to the next level, you can join us in the VIP group. We post trading setups with exact entries, exact targets, exact stop losses, trade justification, exclusive analysis, and so much more. You'll also get access to our group chats, our general chat, trading chart and education chat, help, news, daily video, and trade setup chat. If you are interested in joining our community, go ahead and contact me in the pinned comment of the free channel, and you can find out more information by clicking either of these links. Let's go ahead, guys, and dive into the video. So starting on that market data, how are we currently looking? 24-hour volume is up 2.4%, so sitting around that neutral perspective at 271 billion. 24-hour liquidations up 11%, sitting at 362 million. Of the 362 million liquidations, we can see 259 million came from long positions, and 103 million came from short positions. Taking an incredibly brief look at the price action, in the last few days, we saw that rally up to our target of 72,000. We told you guys in yesterday's video, we were expecting the most likely directional move was going to be a retest of the prior all-time high, which is sitting at that 69k level, and you can see we came back and retested this support perfectly. So far, everything played out in the short term exactly as expected. We're going to be diving much deeper into the short-term charts today, discussing the overall trend, what is happening on the short term, and of course going over what we will need to see for a continuation upwards, or what we would need to see for the bears to step in and take control on the short term. So we'll come back to that in a moment. Taking a look at the DXY saw a short-term bump towards the upside. Overall, not really that much change. Of course, we did have the economic data come out yesterday, which was the CPI data. I did a complete discussion of what the CPI data was and what it means for the future interest rates and what impact the CPI data has had, if any, on the market. If you want to read out more about that, go ahead and check that comment out in our Telegram channel. Again, I discussed it in a pretty big amount of detail, so you can go ahead and check that out. Moving over to the S&P 500, we can see S&P 500 and the Dow Jones alike looking relatively strong. Like we mentioned in our Telegram post, rising inflation is not a bad thing. It is only a bad thing if, one, it is rising out of control, and two, if with the rising inflation, there is a connotation attached to that interest rates will rise in the future. The rising inflation that we did saw was negligible. It was not significant. It was almost expected. It was slightly higher than the forecast by around 0.1%. And thus, the overall narrative, which is the Feds are moving towards a pivot, is not damaged, is still intact. And thus, the market took that announcement as bullish. And we have seen the markets continue upwards since that announcement. Again, the markets are not the economy. The economy is not the market. Markets move based on perceived systematic risk. If we go back to all of our posts we talked about way back, we're talking about 2022, 2023. We told you guys back over here, this is 2023. the market, quote, the market does not need to see a pivot for it to rally. It just needs to expect a pivot at some point as the markets move primarily off perceived systematic risk. Again, if you're interested in learning about the models I use to project the overall economic strength in regards to how the markets will move in future periods based on perceived systematic risk, we have a video in the Telegram you can check out. So overall, S&P 500, Dow Jones looking fantastic. We are expecting a move for the Dow Jones to 4,000. We are expecting a move to 5,500 for the S&P, provided these red levels can hold. So 5,000 holds, that means it will continue upwards. Keep it nice and simple. Dow Jones, this red level holds at 3,800, while we're above here, we expect a continuation to 4,000. If we lose these levels, respectively, that would be cause for short-term concern, and that could result in a correction on the short term. So, without further ado, guys, a quick word from Bitget and BingX, and we'll dive into the video because we have a lot to discuss, so we'll get in. I wanted to briefly interrupt today's video to discuss the two exchanges we use on this channel, Bitget and BingX. So which exchange should you sign up to? If you look to the right hand side of the screen, you're going to see the list of differences in relation to KYC requirements and the countries these exchanges offer services to. The first link down below being the Bitget link, and the second link down below being the BingX link. No matter which link you sign up to, you're going to get up to 15% discounts on your trading fees, up to $5,000 in trading rewards, and of course, you'll get access to every single MegaWhale exclusive bonus campaign we run on these exchanges. Alongside that, Bitget and BingX are incredibly similar. They are both ranked top 10 in terms of trading volume. They both have extensive liquidity pools and market pairs offering up to 125x leverage. And most importantly, they both offer protection funds for their users to protect you against any third-party hacks. So get started now and support the channel by clicking the links below. Thanks for listening. Okay team, let's get back into it and discuss Bitcoin. So primarily, like we saw in the last 24 hours, Bitcoin of course created a brand new all-time high. It broke above that 69k level, closed a daily candle, 5 days remaining until the weekly candle, about 20 days remaining until a monthly candle. Overall, looking fantastic. We'll come back and discuss more about the monthly and weekly candle in a moment, but overall, we have broken above that all-time high. With that breakout above the all-time high, Bitcoin saw a pretty large rally up to $72,000. And of course, that $72,000 was a key level of resistance on the chart and was a key level of confidence on the short term that we have retested and since rejected from. The rejection that we saw from 72,000 was by all means a healthy correction. It resulted in a retest, okay, of the 69k level, which if we zoom out to the macro, the 69k level is in fact the all-time high of the 2021 cycle. So this correction so far, this short-term correction down to support, has been considered a healthy retest. And by healthy, I mean that the correction has had zero impact on the overall short-term trend of Bitcoin's price action. So when we see a correction that has zero impact on the overall trend of the price action, that is what we would consider a healthy correction, as the key levels, these lower highs, the support levels we are watching, have not been broken. So the big question is, where will Bitcoin go next and what are we watching out for? So let's go ahead and start off by talking about the bullish case scenarios for Bitcoin. So we have two bullish case scenarios for Bitcoin. We have a short term and then we have a 4-hourly bullish case scenario. So let's start on that hourly chart. Of course, guys, we have retested this major area of support. And as we know, prior resistance becomes future support, as we discussed in yesterday's video. We can see how that area has held as support. Currently, what we are looking at on the price action is we have this downtrend on the RSI. This is going to be reflective again of the momentum within the range of price action since that 72k retest, and of course this cluster of the liquidity wick down to 69k and that move up to 73k. So the area I have squared out on the price action chart is a representation of the momentum on the RSI. So what are we looking at over here? We can see, of course, we have falling momentum, okay, and the price action is creating these higher lows. This, of course, is indicative of absorption. We are seeing the same thing happen, and you're going to hear a lot on this channel moving forward in a couple months, as we have heard basically the entire last year, absorption is very much present on high time frames and short term as the overall trend is upwards. So exhaustion, like we said yesterday, is nothing to worry about unless the exhaustion results in structural breakdowns of support and actual trend shifts that develop into weakness. If exhaustion is present, but we have strength behind it, meaning absorption, then there is no cause for concern, and it's likely that any correction derived from that exhaustion will not interfere with the high time frame strength, the overall short-term trend, or any key structural levels of support that have been developed, resulting in a continuation. So what are we looking at over here? Of course, we have a downtrend on the RSI. A breakout of this RSI downtrend will very much likely push Bitcoin over that prior level of resistance. The current level of short-term resistance is sitting just over 72,000, sitting around 72,500. A breakout of that RSI will push Bitcoin upwards to likely retest this level of resistance. And again, guys, if we retest the level of resistance and we have positive momentum, the probability that we continue through the resistance is greater than the probability that we reject from the resistance. So a breakout of the RSI is not confirmation we are going to break through the resistance. The breakout on the RSI is confirmation that we are going to move to retest it. And when we get here, now there is a degree of probability. Of course, trading is always about probability. There's a greater probability we push through while we have positive strength than a rejection while we have positive strength. Of course, makes perfect sense. So let's go ahead now and zoom out to the other bullish case scenario. If we were to continue upwards, where would we likely go for Bitcoin on a short term? Okay. And what would we need to see for a macro continuation even higher? So of course, this is going to be our RSI trend line. Let's just go ahead and quickly adjust this trend line over here perfectly. This trend line over here, this uptrending resistance trend line, is again a reflection of the overall RSI trend line, which again is a derivative of the price action itself. So we take peaks to equal peaks on the RSI and price action. This indicates the overall momentum. Again, this is just exactly the same thing we talked about on the short term, now on a broader time frame, that we are seeing within the cluster of price action developing from that $60,000 breakout to that 72K range. So if we want to see a strong continuation upward for Bitcoin, taking us to that $80,000 target, which we'll discuss in a second, we do need to see that momentum flip back positive on the 4-hourly, which means we would need to break through this RSI trend line. For this RSI trend line to be retested or broken, we absolutely need to see a breakout of that short-term resistance at 72.5K. Again, if we see that breakout, we likely continue upwards on both the short-term and the and on the higher time frame. So let's talk now about the bearish scenario. So like we said, the short-term trend is intact, both from a structural perspective, which is going to be that 69K level of support, from a technical perspective. But of course, like we said, from one more element, we are above that 50 EMA. We are very much above our smaller time frame moving averages. The strength of the trend is very much still there. Okay, so let's talk about our bearish case scenario and the key levels of support we are watching. So for the bears to take control, guys, we can't just see exhaustion. We can't just see corrections. We need to actually see real levels of weakness develop on the chart. So we need to see key levels actually break down. If we take a look at the price action, the 69K level is a very obvious level of support, as this represents the prior all-time high for Bitcoin. This is the 2021 all-time high. It is now a base of support. If we look at the prior structures of price action, we have got another support here at 65.8. This is going to be our range low of consolidation that we developed on the 24th of March before we had this continuation of higher lows develop into an eventual breakout of 69K and continuation to 72K. So we know that this area here at 65.8, we'll go ahead and draw it in, 65.8 is as well a key area of support. Okay, we'll just write support. And then finally, we have our major base of support, which constitutes the support ever since essentially the start of March, which is all the way down at 60,000. Now, 60,000 is also a key level of support. If we zoom out to the higher time frame, we can see 60,000 was the last level of resistance prior to a retest of the all-time high. So it's a key level of structural support. So moving over to the short-term chart again, if we want to see the bears take control, we need to first lose this area of support at 69k. And we don't only just need to lose that area, we need to drop below the prior higher low, which was developed at a price range specifically at 68,100. So a breakdown of the support and breakdown of this higher low, that only then would tell us that the bears are now officially in control, and we will be expecting a correction to 65.8k. 65.8k would be the target where we would now expect a bounce and potential continuation back upwards, or if we were to lose this level, we can see the VIPV significantly falls off to around that POC level, and then we'll be expecting consolidation around that POC and potential liquidity grab into that 60k range. So right now there is no need to be bearish. I'd be expecting continuations upwards until that happens, until we break below 68.1 to 69k. That and only then is when the bears take control in the short term, and then we are looking for 65.8. We lose 65.8. We are looking for a liquidity grab into 60. Again, even if any of this happens, the high time frame continuation is still expected. So even worst case scenario, Bitcoin drops down to 60k, we are still expecting a continuation upwards on the macro as our key trigger point, which put us into a bull market. Remember, we are in a bull market above 48k. Now, no matter what happens, whether it be a 20% correction, 30% correction, 5% correction, 2% correction, 10% correction, we are still in a bull market provided 48k holds, and therefore any correction above 48k would be considered healthy on the higher time frame for continuations upwards, and therefore it is irrelevant, and also I would say almost, what's the word for it? Overly ambitious to expect Bitcoin to drop down to 30,000 to 32,000 or lower, while we have so many levels of short-term and high time frame support we would need to break down before these targets become even probable. Remember, trading is a game of probabilities. If you have 5 supports below you, the probability of you reaching that 7th or 6th support is significantly lower while we are above all these supports. There's simply a game of probabilities. Okay, that's a very simple way to explain it. Again, it's a lot more complex than that, and we talk about it on the channel. We're not going to get into it too much today. Okay, so that is a short-term price action explained, guys. Watch what is happening. Expect every single correction to be healthy unless it is proven otherwise. This is the big thing. I'll say it again. Expect every correction to be healthy unless proven otherwise. And this hasn't proven to be an unhealthy correction yet. And therefore, aligning yourself with the bearish scenario is aligning yourself against the likely scenario. And it's not always about being right. You can be wrong sometimes, even when you align yourself with the likely scenario, because nothing is certain in trading. Everything comes with a degree of risk and probabilities. So we'll leave it there, guys. Let's move over to the higher time frame charts. Taking a look at the total cryptos and market cap. Just one more note, we've given you a plan to execute for the upside and the downside. No matter what happens, you will be able to execute that accordingly and benefit from whatever occurs. So once again, plan. Failing to plan is planning to fail. If you actually got a plan in there and you have it planned that you can execute, you're always going to be 10 steps ahead. No matter what happens, you're never going to get caught off guard, okay? If you're looking at one particular direction only, you are blinding yourself to 50% of the potential movements within the market, and that means your probability of success, if you have a 50% win rate, is only 25%. So you have to make sure you're aware of all scenarios, and you actually are open to any scenario developing and playing out, and you have a plan, most importantly, to execute whatever occurs. So total crypto market cap looking fantastic. Like we said, total crypto market cap is lagging behind Bitcoin. Bitcoin had broken an all-time high. We are expecting this to push up to the $3 trillion range. Looking at the total altcoin market cap, again, this is lagging to not only Bitcoin, but also the total cryptocurrency market cap. We are expecting a retest of 830 billion. It is upon the $830 billion breakout when altcoins will start entering their parabolic phase of this cycle. Altcoins have not technically entered that parabolic phase of the cycle. Yeah, sure. Some coins like DOWJ, like SHIB or like Flocky have done very, very well. In fact, I put $6,000 into the Flocky. It's like $67,000 profit now just in 5 weeks. So we've seen a massive return on that in VIP. But my point is some altcoins have done very well and some altcoins are still doing okay. 30%, 40%, 50% up from those October levels, potentially even a little bit higher. But the major parabolic move for altcoins have yet to even occur when we break above that $830 trillion level. That point of resistance, that dead cat bounce high, that and only then is when we're going to start to see significant daily gains on altcoins. We're going to start seeing altcoins blast up to potentially retest their prior all-time highs. Not every altcoin will do so. Of course, some altcoins will underperform massively in this cycle, but on average, we're going to see altcoins perform very well above that level. Moving over to that daily chart, guys, like we said, Bitcoin has broken above that weekly candle, that weekly point of resistance on the higher time frame. While we remain above here, it is looking fantastic, taking a measured move like we did in the video yesterday from our lows to our points of resistance and to our breakout points. Again, a measured move is not based on percentage, it is based on vertical distance, okay? It is distance or ratios between highs and lows of structures. So you don't take the percentage of the gain from the low to the high and apply it, you take the actual length from the low to the high and apply it. Now that takes us to 80,000, and that is what we were talking about before in the short term. We expect $80,000 if we see that 4 hour, okay, RSI break upwards. We would expect 80,000. Until then, we are needing to see, again, that 1 hour break upwards for a continuation on the short term, unless we come back down and retest this area of support. So again, moving back to the daily chart over here, it's looking pretty good. We have 5 days into a weekly candle. It would be fantastic to close that weekly candle above, but if we don't close the weekly candle above, it is not the be all and end all. If we move to the monthly chart, we can see we need to see a monthly close above that prior high at 69K. And this is in 19 days time. For Bitcoin to enter the parabolic phase of the cycle, we need to see a monthly candle close above 69K to then enter that up only phase on the monthly chart, which is the eventual parabolic ramp to the all-time high, okay? If we fail to see a monthly candle close from this level, it is not the end of the world. We have seen rejections from the all-time high before. Look back at 2017. We saw 3 months of consolidation at the level of the prior all-time high. So we definitely could see a failure to break the monthly candle over, but again, it comes back to perspective. It doesn't matter if we see a failure to break over, as long as the high time frame trend is intact, we will eventually see that breakout. It doesn't have to happen this month. It will likely continue to happen at some point, even if it doesn't happen this month, okay? Keep that in mind. Now, if I were to take a look at the overall probability of a close above, I would actually say at the moment, based on what I'm seeing, it is quite unlikely we're going to close a monthly candle above, purely from a perspective of momentum. We have not broken that 80 on the RSI. If we look at the prior times we have closed a monthly candle above, we have every single time the RSI has breached that 80 point. So it is too soon to tell now, but that the price action has breached the all-time high, but the RSI has not. That could be a warning sign for a potential failure to close a monthly candle above. But again, like we've said, historically, we have seen rejections. Let's just go back to this chart really quickly. If I can find it, I'll look for 2 seconds. If I can't find it, we'll move on. It is the chart that discusses the probabilities, or here we go, the prior breakdowns from all-time highs. We have seen in the 2017 cycle, a 36% correction from all-time high. In the 2021 cycle, we saw a 12% correction. So there is a chance we do see pullbacks from the prior all-time high levels. It is not unheard of, and it wouldn't be coming as a surprise. That's the most important thing if it does happen. So plan and prepare, understand the context, and keep it calm. Thank you for watching. Hope you have a fantastic day. We're giving you everything you need to know now for the short term to execute, for the macro perspective, for everything. I couldn't go over more detail if I tried. If you've got any questions, leave them down below. We'll catch you guys in the video tomorrow and hopefully discuss some more. See you then. Cheers.